Good morning and welcome to TOITOI Japan Market Radio. I'm your host, speaking to you from Tokyo on Friday, April 11, 2026. This is your daily briefing on Japanese equities, foreign exchange, and rates, designed for global investors with exposure to Japan or those monitoring the market closely. Joining me today is our portfolio manager focused on Japanese macro. Let's start with the market summary. What do we have today?
Thanks for having me. Well, the key headline today is that Japanese markets were actually closed for a public holiday, so we have no Nikkei 225 or TOPIX price action to report. That said, there's plenty happening globally and in the policy space that matters for Japan positioning, so there's still a lot to discuss for investors watching the region.
Absolutely, and we do have several significant news items that have implications for Japan when markets reopen. Let's dive into those. The first story comes from Bloomberg, reporting that Japan is committing a substantial $16 billion to support Rapidus, a domestic semiconductor startup focused on advanced AI chips. This is a major state-backed industrial initiative. Can you walk us through what this means for Japan?
Sure. What's happened here is that Tokyo is making a very large fiscal commitment to build domestic semiconductor manufacturing capability, specifically targeting the AI chip segment, which is one of the most strategically important areas in tech right now. Rapidus is a relatively new player, and this funding is designed to accelerate its development and production timelines.
And why does this matter so much for Japan specifically?
A few reasons. First, this is about strategic autonomy. Japan has been heavily reliant on Taiwan and South Korea for cutting-edge semiconductors, and given geopolitical risks around Taiwan especially, Tokyo wants to reduce that dependency. Second, it's classic industrial policy. Japan is trying to reclaim a leadership position in semiconductors, which it actually had decades ago before losing ground. Third, if Rapidus succeeds, it could create a high-margin export industry and support long-term GDP growth, which Japan desperately needs given its aging demographics. And finally, this aligns with the broader US-China semiconductor competition, where Japan is positioning itself as a reliable partner to the West.
Right, so it's not just about economics, it's also geopolitical positioning. How should investors think about the impact on Japanese equities, the yen, and yields?
On equities, I'd say this is modestly positive, particularly for semiconductor equipment makers like Tokyo Electron and Screen Holdings. These companies supply the tools and materials needed for chip production, so a $16 billion investment into domestic capacity is a clear tailwind. More broadly, if Rapidus hits its milestones, you could see positive sentiment spill over into the broader electronics sector. On the yen, I think the impact is fairly neutral to slightly positive. Large fiscal commitments like this can support growth expectations, which marginally helps the currency, though it's probably offset by the Bank of Japan's continued policy divergence with other central banks. As for JGB yields, 16 billion is material, but in the context of Japan's overall fiscal picture, it's unlikely to move the 10-year yield in any significant way. Fiscal sustainability concerns are already well priced in.
Got it, so the main takeaway is positive for tech-related equities, but execution risk remains. Shifting now to a different theme, geopolitical tensions. We're seeing reports out of India that equity indices, the Sensex and Nifty, declined in early trading today due to renewed tensions in West Asia. This is triggering a broader risk-off sentiment. How does that connect to Japan?
Well, Japan is quite exposed to West Asia geopolitical risks through several channels. The most obvious is energy dependency. Japan imports the vast majority of its oil and LNG from the Middle East, so any escalation in that region tends to spike energy prices, which hits Japan hard. Second, supply chain disruption is a real risk. Japanese manufacturers depend on stable shipping routes through the Persian Gulf and the Strait of Hormuz, so if those are threatened, you see logistics costs rise and potential delays. Third, there's the spillover effect. When you see emerging markets like India selling off on risk-off sentiment, that often spreads to other Asia-Pacific equities, including Japan, as global investors de-risk.
So even though the headline is about India, the underlying driver, West Asia tensions, has direct implications for Japan. What's your view on the likely impact across asset classes?
For Japanese equities, I'd expect downward pressure. Risk-off sentiment typically weighs on cyclical exporters, and if oil prices spike, energy-intensive sectors like automotive, chemicals, and steel face margin compression. On the yen, interestingly, I'd expect strengthening. The yen tends to act as a safe haven in these scenarios, particularly if crude prices rise and energy concerns mount. Investors often buy yen as a hedge. And for JGB yields, I'd anticipate downward pressure. You'd see a flight to safety bid into Japanese government bonds, compressing yields if risk aversion intensifies.
So a classic risk-off setup: equities down, yen up, yields down. Staying with the energy theme, Reuters is reporting that U.S. drivers from Boston to Denver are cutting back on fuel consumption as the conflict with Iran pushes fuel costs higher. How does rising crude oil impact Japan's outlook?
This is really important for Japan. As I mentioned, Japan imports roughly 90% of its oil from the Middle East, so escalating tensions with Iran create significant supply-side risks and upward pressure on global crude prices. Higher energy costs directly widen Japan's trade deficit, because the country has to pay more for the same volume of imports. That pressures the current account balance. It also increases input costs for manufacturers, which squeezes corporate margins, especially in energy-intensive industries like chemicals, steel, transportation, and utilities.
And there's an inflation angle here too, right?
Exactly. If crude prices spike and stay elevated, you could see imported inflation re-emerge in Japan, which complicates the Bank of Japan's inflation management. The BOJ has been trying to achieve stable 2% inflation, and if energy-driven inflation distorts that picture, it could require policy recalibration, which markets would need to reprice.
So let's break down the market impact again. What are you watching in equities, foreign exchange, and rates?
For equities, I'd say the near-term impact is negative. Energy-dependent sectors face margin compression, and while exporters might benefit from yen weakness, that's not enough to offset the broader headwinds. On the yen, higher oil prices widen the current account deficit, which creates weakening pressure on the currency. More dollars needed to pay for imports means higher USD, JPY. And for JGB yields, you'd likely see upward pressure. Rising inflation expectations could force the market to reprice BOJ policy in a more hawkish direction, which would steepen the curve or at least put upward pressure on the 10-year yield.
So in this scenario, yen weakens, yields rise, equities under pressure, quite different from the West Asia risk-off scenario we discussed earlier. It really depends on whether the market interprets this as a pure risk-off event or an inflation shock.
Precisely. And that's why it's critical to monitor crude price levels closely. If we see sustained oil above $85 per barrel, that poses material downside risks to both Japanese equities and the yen. Geopolitical developments and OPEC supply decisions will be key variables in the coming weeks.
Absolutely. So to recap for our global investors, we've covered three main themes today. First, Japan's $16 billion commitment to Rapidus and the AI chip sector, which is modestly positive for semiconductor equipment stocks and reflects Tokyo's strategic industrial policy. Second, renewed West Asia tensions triggering risk-off sentiment in India and across emerging Asia, with potential spillover into Japanese equities and safe haven demand for the yen. And third, rising crude oil prices driven by US-Iran conflict, which creates inflationary pressures, widens Japan's trade deficit, and complicates the BOJ's policy outlook.
That's a great summary. I'd add that even though Japanese markets were closed today, these are all themes that will likely drive price action when trading resumes. Investors should keep a close eye on energy prices, geopolitical headlines, and any updates from Rapidus or related semiconductor policy developments.
Excellent. If you're a global investor tracking Japan or managing exposure to Japanese equities, FX, or rates, we hope this briefing has been useful. Consider subscribing to stay updated on the latest developments in the Japanese market. Thanks for joining us today, and we'll see you next time on TOITOI Japan Market Radio.
Thanks, looking forward to the next session.